Let's talk about a company here. Let's talk about Lidos. I'm sorry. No, we're going to talk about Vulcan Materials first. I'm sorry. Their symbol is VMC. They're in the building material industry, only about 4% short on the float side, 98% institutional owned. PE ratio starts on the high side. It's 37 versus 24. Price of sales 5.2 versus 1.6. Price to book value 4.7 versus 1.7. Price of cash flow 24.1 versus 12.3. And all these are valuation ratios. You do want them lower than the industry average, and unfortunately, they're not for Vulcan Materials. Even the PEG ratio going forward is a little bit high. It's 3.2. The industry is at 3.1. So not a good start in the valuation ratios. Now, they have done well. I mean, their earnings over the last year are up 22.6%. Industry was down 18.7. Sales declined by 6.3%. Industry was down 0.7. So those are two big positives. Another positive, the 5-year earnings share growth estimate by the analysts, 11.2% versus 9.9% for the industry. Now, they do pay a small dividend, 0.7%, using about 23% of their earnings to pay that out. Taking a look at the balance sheet, we do see the balance sheet got a current ratio of 2.2 versus 2, so good liquidity, that's positive. Debt to equity, 0.6 versus 0.5, no problem with the debt to equity. We do see a net profit margin for Vulcan Materials of, 14.2%. About the same as the industry at 14.3. Return on equity is on the low side, 12.8 versus 24.6. These you do want higher. And then return on invested capital is 10 versus 19. Again, could be a problem there. Free cash flow looks okay. $1 billion versus $1.5 billion for the industry. Chase, what do you got going forward?
Let's give you an idea of what this company does, and the reason I was kind of interested in it is they did fall last week after reporting some disappointing results. But, this is, again, a construction company, and with the infrastructure kind of build out that we anticipate happening, I thought this would be a benefactor here, but you may have missed the boat. What this company does is they provide, crushed stone, sand, gravel, sand, and other aggregates for use in construction and maintenance of highways, streets, and other public works. They also, too, work in the construction of housing, commercial, industrial, and other non-residential facilities. They use aggregates that are used for ballast and construction and maintenance of railroad tracks. They then also just work in asphalt construction, paving services, and ready-mix concrete. So this, again, would be a great place to kind of be investing, if you get it at the right value, for an infrastructure build-out. But unfortunately, we look at that current price here of $310 per share. The 52-week range, the low is $215.08 and the high $331.09. So it is near that 52-week high. And also, the big reason I say unfortunately is you go up to December 2027, estimated earnings per share here, $10.92. It gives us a target sell price of $181.27. This thing trades at almost 30 times those future earnings. So definitely not getting a value when we look at Vulcan Materials.
Yeah, and also, too, you're talking about a basic material company, sand, gravel, I think you mentioned, concrete, stuff like that. And we didn't mention about the tariffs, that there is deals where we don't know how many trillions will come out in 2026. Maybe it's only 2-3 trillion. But that's money coming into the economy. That's about 10% of the economy. That will benefit companies. Maybe that's why Vulcan Materials is so high, because they know there's going to be more construction going forward.
I mean, you mentioned that situation, but the other big situation is the data center build out.
Yeah.
I mean, I don't know if you've seen those things, but I got to imagine they use a lot of concrete.
Yeah.
Those things are huge.
And there will be a lot of construction going on, which is where you get companies like this that could benefit. But that's what I'm saying. I think it's already baked into the cooking. Maybe we do have a pullback this year, and companies like Vulcan Materials, that could be a buying opportunity. But I think you said right now it's not even, a little over half is a target sell price right now of the companies.
Yeah, I mean, it trades at, again, those 30 times. We like to sell out at around 16.6 times those future earnings. So it's pricey. I mean, this is almost one where I wonder, you'd have to wait until there's an economic slowdown and things aren't looking good from the build-out side where you could pick this company up on sale. But right now, definitely not on sale.
Well, I mean, the software companies are down about 50%, some of them. So, I mean, you could see a Vulcan Material trade at 150.
No, it's definitely very possible, but yeah. I think when things are good, obviously, everybody else thinks they're good. You want to be buying things when everybody else thinks things are bad.
Yeah, everybody wants to get in when things are hot and exciting, and it's just like, why would you pay the highest price for something? Why not be patient and wait for things to go on sale? And if you miss the sale, then find something else. Stocks are the only thing that people loved paying higher prices for, as opposed to paying them when on sale.
Yeah, it's a great investment thesis where you buy it and you hope somebody will pay you more for it down the road. And it's just not really going to be great in the long term if you're always paying high prices for things.
Yeah, I don't see how you're going to make money doing that. And that's why people say, oh, stocks are so risky. Stocks aren't risky. They're risky because you do silly things.
Yeah.
So